You may be thinking, what in the world is Timalyn talking about? I'm talking about the Trump accounts where you make the election to opt into it with Form 4547. Now, Trump accounts is uh, that's what I believe they're going to actually be known as. But what it technically is a 530A custodial account. Now, check this out. With this account, it is an individual retirement account that you set up for your children. And by making the election to opt into it, you'll get $1,000 contribution from the Treasury Department.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family. Welcome to episode 89 of the Tax Relief with Timalyn Bowens podcast. This episode is for the babies. Literally, it's for the babies. Okay. Now, we're not talking about them owing taxes, right? We're not talking about reducing penalties and interest for them, but instead, we are talking about small things that we can do to help set them up for a better future financially. Because if you have children, if you have nieces and nephews that you spoil financially, you know, the little people are quite expensive, right? So there's one thing that came about last summer when the One Big Beautiful Bill came through that I haven't had the opportunity to cover yet here on the Tax Relief with Timalyn Bowens podcast. And I want to talk about it today because it's yet in the pilot stage, but we have a little bit more information about it. And if you haven't filed your 2025 tax return yet, hopefully it's on extension and it's not just late, but you still have time to make the election to opt into this opportunity if you had a child in 2025, okay? And if you need to make an election right now in the middle of 2026, you can now do that online, okay? So you may be thinking, what in the world is Timalyn talking about? I'm talking about the Trump accounts where you make the election to opt into it with Form 4547. Now, Trump accounts is that's what I believe they're going to actually be known as. But what it technically is a 530A custodial account. Now, check this out. With this account, it is an individual retirement account that you set up for your children. And by making the election to opt into it, you'll get $1,000 contribution from the Treasury Department. So, yes, somehow the country is running at a deficit, but we're going to make $1,000 contributions to these accounts. Anyway, I don't make the rules. I'm going to be neutral and just state the facts here. And which, by the way, just keep in mind that if you choose to comment on today's episode, let's keep it nice and neutral. Ask questions about the accounts. Let's not discuss whether or not we like the current administration, or else I may have to block you from the page. Okay? So, with that being said, what is a Trump account? Or like I said, the 530A custodial account. It is a type of traditional IRA. So that's going to be the individual retirement account. And it has to be established by an authorized individual and is for the exclusive benefit of a child. Now, we're going to talk about who is an authorized individual a little bit later on, but this account is not set up for the adult. It's set up for the child that is listed. And the election is made again on Form 4547. You see what they did there? You know who the 45th president and the 47th president are? Anyway, the child's going to be listed there, and they will become the owner of this Trump account, which also is making them the account beneficiary. Okay, so making this election doesn't make you $1,000 richer. It is going to put $1,000 into an account for your child. Okay. So, in order for the child to qualify to receive the $1,000, the child has to meet additional requirements other than being your child. Okay. So, when we're looking at that, there is a very specific reason I said they have to be, or this is for the babies. Okay. So, on Form 4557 in Part 2 is where you list the account beneficiary, the owner of this initial account, and this election can be made for children who are under the age of 18 at the end of the tax year when the election is made. Okay. And for an election in 2026, the child must have been born after December 31st, 2008. All right. They have to have a valid Social Security number issued before the election is made, and they cannot have had a Trump account election filed on their behalf previously. Okay? So, check this out because this may be what makes it a little bit confusing. All right? So, when we're looking at this, there's been this huge ordeal about whether this was a good idea, a bad idea, if $1,000 was enough or not. And it's expensive outside. So every little bit of money that you get to help take care of a child, I would say take it if you have the opportunity to. You know, this isn't one of those things where you are looking at it like, oh my goodness, a handout, we have to stand out in line or, degrade yourself to get. So, in my opinion, I say, why not make the election? Because essentially, it's going to be seed money for your child's retirement account. Okay. So, when you do this, hang on just a moment, because I just messed up something here with my notes. There we go. So I gave you the age requirements of the child, right? And that's per IRS. They have to be born after December 31st, 2008. And they must be under the age of 18 if the election is made in 2026. However, for eligibility, I don't know why they list that for the account beneficiary. For you to make the election, for them to be eligible, it has to be a baby. So the child must be born specifically between January 1st, 2025 and December 31st, 2028. So you could have made the election in the 2025 tax year for your child who was born in 2025, not for your child that was born in 2023, 2022, or 2020. All right. So again, if you're looking up certain things, We want to make sure that we're looking at the actual Internal Revenue Code, because sometimes the publication isn't translated the way that the code actually reads. Okay. Now, when we're looking at this $1,000, there is what's going to be the growth period. Okay. So with this, it's important to note the growth period, because these Trump accounts are going to have special rules that aren't going to apply to like your traditional IRA that you would set up on your own or through an employer. So for the Trump accounts, we're looking at it being established on the date that the 31st of the year before the calendar year in which the child turns 18 is when it ends, and it begins when you make the election. So the example the IRS gives: a child born on October 1st of 2025 would turn 18 on October 1st of 2043. So the last day of the growth period for this child would be December 31st of 2042. Okay. So during the growth period, there can be a rollover Trump account established for the child. With this, if there is a rollover account, it must be funded by a trustee transfer of the entire account balance from the existing Trump account. Okay, so that's going to be the qualified rollover contribution. Essentially, these are not going to be the accounts that you use to make your child a millionaire, because it's not going to be super easy to invest into them. Okay. Now, during the grow period, the special rules that apply include a Trump account can only be invested in eligible investments. So they're restricting what you can invest in through the account. A Trump account has separate contribution limits from other IRAs. Okay. Number 3, no deduction is allowed by an individual. And for those of you who are tax nerds, it's under Section 219 for any contribution to a Trump account. So when you have an IRA set up on your own or through an employer, we're looking at a traditional IRA, you contribute $3,000, you have a $3,000 deduction, right, from your taxable income. Well, if you're contributing to this, there's no deduction allowed by the individual, okay? And then, last but not least, a Trump account generally is going to restrict distributions from the account, all right? So, with your traditional IRAs, if you have a distribution before 59 and a half, you can still get the money out. You're going to pay tax on it and pay a penalty. Well, let's say little Billy has an issue and you want to get the money out. You can't go and request a distribution as easily from this Trump account as you would be from the type of IRAs that we're accustomed to. All right. So I mentioned being an authorized individual to set this up. You, as a taxpayer, if I had a child, would not be able to establish the initial Trump account for me. Okay. When we're looking at the authorized individuals, first, we would make the assumption that the parent is going to be the legal guardian. So legal guardians can do this on their tax return. We have, again, legal guardians and parents aren't always synonyms. So in the event that the legal guardian parent aren't the same person, the parent could be an authorized individual, an adult sibling, or the grandparent of the child. And similar to how we determine who is eligible to claim a child, we are looking in the order that I listed of priority. So we would look at the legal guardian first, then the parent, then an adult sibling, then the grandparent of the child. Okay. And we don't have to look in that order of priority if we don't have more than one person that meets the condition to be an authorized individual. That is when we look and it's subject to the order of priority. Okay. And again, no prior Trump account election has been made for the child. If there has been, then you can't make that election. So to me, this is going to be kind of interesting to see how it plays out, because if we have parents that aren't on the same page, or maybe they don't file together, they're married filing separately, or they're not together at all anymore, they could end up causing delays in trying to get this set up for their child if they're not on the same page about who's going to actually set up the account for the child. Okay. Now, with this, to make the election, to make the request, I mentioned you're going to fill out form 4557. Now, with this, you, as the authorized individual, are going to be listed. The child's going to be listed. Again, they have to be under the age of 18. They have to have a legitimate social security number. Yes, that is the verbiage that is used here. A legitimate social security number. And then when you make the elections, also make sure that you understand that there are 5 types of contributions that can be made to the account. So during this season that we're in, I would say we're still in the beta with it. We have the pilot program contributions that are going to come from the U.S. Treasury. Okay, so from our great country itself at $1,000 per child. Okay. Later, there can be qualified general contributions. Now, these are to be funded by states or political subdivisions of the states. They can be funded by the United States, District of Columbia, Indian tribal governments, or nonprofits for members of qualified class of account beneficiaries. Okay, so again, after the pilot program, it's not going to be as easy to contribute. Now, the state and the US and the Indian tribal governments, nonprofits, they're not the only people that can contribute. Employers can also make contributions that are not includable in the gross income of the employee. Okay. And again, for those of you who are tax nerdy like myself and want to go look this up for yourself so you know that I'm not making it up, that's under Code Section 128. So say you work for me at Bowens Tax Solutions, you have a child who has a Trump account. I want to make contributions to that account on or for them to put money in there. Let's say I put $1,000 in there. That $1,000 is going to go into the account to grow, but it is not going to be taxable to you. So it's not including your income. So you're not getting hurt by me contributing to your child's account. Okay. Then we have qualified rollover contributions. Remember, I talked about that earlier, which are transfers to a rollover Trump account of the entire amount of the child's prior Trump account. Okay. Then we do have where they say we can make contributions from other sources, such as the child's parents, or any other person. So, yes, that was a lot. And we'll see how it goes. Now, another reason I didn't want to cover this earlier is because contributions couldn't be made to Trump accounts before July 4th of 2026, country's 250th birthday. So now that we're past that, you should be able to make contributions to the account, whether it's you as the child's parent, legal guardian, or if your employer is going to contribute, or if you have a 501c3 that meets the requirements to be able to contribute, we can start putting money in there to grow. Okay. Now, when the contributions are made on behalf of the child is not going to get taxed on the amount that was contributed on their behalf. Just like I mentioned, like if your employer contributes something, you're not going to get taxed on that at the time, and neither is the child. Okay? Now, what we have to be mindful of is how much is contributed, where it's coming from, because just like with your IRA that you have set up on your own or through work, you want to make sure that you are tracking your bases. So that's something that I most definitely would encourage you to do so that you know how much in the account is actual growth and how much is what came from the pilot program with $1,000, how much you may put in, how much the employer may put in, so that when distributions are made, you're able to be equipped to tell your child how that's going to affect them financially and on their tax return, right? And you're equipped to do that because you listen to Tax Relief with Timalyn Bowens and you listen to Retirement and Taxes, and you know the implications of having distributions from those different forms. Now, during the growth period that we talked about earlier, the only distributions that can be made from the Trump account are qualified rollover contributions to roll over a Trump account. Okay, so that's a qualified able rollover at the age of 17. The distributions, again, that you have for like purchasing your home or because you have an emergency, those are not going to be allowed. Now, after the growth period, so that's going to be January 1st of the year that they turn 18, because remember, it ends December 31st of the year before they turn 18. That's when they can begin to take distributions. And when they do that, most of the rules that apply to traditional IRAs will also apply to the Trump account. Okay, so for this custodial IRA, when your child takes the money out, because it was tax deferred, they're going to pay taxes on it at that time. All right, so we want to make sure that nothing is taken out too early so they're not hit with a 10% additional tax on any early distributions. Okay, now there will be some exceptions, which I'm not going to go through all here because this episode is already a little bit longer than we typically go. But you can look those up to see how you can avoid that extra 10% tax when the distribution is made. Okay? Now, I know sometimes it's easier to show you than to tell you. And that is the reason why on the America's Favorite EA channel, I'm going to also be doing a video that goes over Form 4557 so you can actually see part one where you'll put your information in as the parent or guardian or the authorized individual. You'll see the part two where you put in your child's information. You'll see where you actually make the pilot program contribution election to say, hey, we definitely want that $1,000, right? So again, that's going to be for children who are born after December 31st of 2024, all the way through January 1 of 2029. Okay, so in between that time frame, so essentially we have 2025, 2026, 2027, 2028. Those children born in that period are going to be the ones who are eligible to receive that initial $1,000 contribution from the United States Treasury for their account. Okay. Now, before I let you go, there is one part that I need to make you aware of. There is a section on the 45, 47 on part 4, the consent to disclose information. The IRS is very serious about protecting your privacy. So, because the IRS and Treasury Department is not actually who's in charge of managing these accounts for you and on your behalf, you have to give them permission to disclose your information to the people who will be setting up and managing the accounts. So don't be shocked when you see part 4, the consent to disclose information. They are doing their part to let you know that a third party is going to have access to the information that you shared so that the account can be set up on behalf of your child. So the same information that you would put into Fidelity or Edward Jones, they're using that information so they can set the account up for you. Again, I don't remember if it's even been released, like what company these Trump accounts are going to be set up through, but that is why that consent to disclose in part 4 is going to be there. All right. And then you can make this election with Form 45, 47 on paper. Your best bet, though, is going to be to file this with your tax return. If you have a paid professional, they should take some continuing education classes, courses, so they're equipped to do that for you on your behalf. Or, like I said, now we are mid 2026. You can also make the election online as well. And I do believe that the website to do that is at trumpaccounts.gov. So yes, www.trumpaccounts.gov. All right. I know this episode has been significantly longer than we typically go. We're usually in like the 15-minute mark, but I wanted to make sure that I covered this. If you found the episode helpful, please let me know down in the comments. Make sure that you share this with friends and family members who are currently having children, planning to have children within the next 4 years, because this is money that will definitely be beneficial, because again, $1,000 may not seem like a lot, but every little bit counts when we're raising these little people, right? So thank you so much for listening. I appreciate every like, share, and comment and subscriber, because you are helping me on my personal mission to fill the tax literacy gap one taxpayer at a time. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family, because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.